Top 21 tips and tricks on getting a home mortgage loan. While everyone considers buying a home at some point in their life, having to get a mortgage to pay for it can seem intimidating. Hopefully, these tips and tricks you're about to learn can help you better understand home mortgage loans. Remember that the interest rate isn't the most important part of a mortgage. You also have to think about closing costs, points, and other incidentals. There are different kinds of loan as well. That is why you have to find out as much as you can about what you're eligible for. Check your credit report before applying for a mortgage. With today's identity theft problems, there is a slight chance that your identity may have been compromised. By pulling a credit report periodically, you can ensure that all of the information is correct. If you notice items on the credit report that are incorrect, fix any issues before you apply for a mortgage loan. Be prepared before obtaining your mortgage. Every lender will request certain documents when applying for a mortgage. Do not wait until they ask for it. Have the documents ready when you enter their office. You should have your last 2 pay stubs, bank statements, income tax returns, and W-2. Save all of these documents and any others that the lender needs in an electronic format so that you are able to easily resend them if they get lost. Make sure you know how much you can afford before applying for a mortgage. Do not rely on what your lender says you can afford. Make a budget, allowing room for any unexpected expenses. Use online mortgage calculators which can help you estimate how much mortgage you can afford to pay monthly. When you see a loan with a low rate, be sure that you know how much the fees are. Usually, the lower the interest rate, the higher the points. These are fees that you have to pay out of pocket when you close your loan. So, be aware of that so you will not be caught by surprise. Check out the interest rates for 15, 20, and 30-year term lengths. Many times, the shorter the term length, the lower the interest rate. Although you may think your payment will be higher on a shorter term loan, you can actually save money on your payment by choosing a lower interest rate and a shorter term. Approach adjustable rate mortgages with caution. You may get a low rate for the first 6 months or so, but the rate can quickly increase to the current market rate. If the market rate goes up, your rate can go up as well. Just keep that in mind when you are considering that option. If you're having trouble getting approved for a mortgage, consider purchasing a fixer-upper home rather than your first and most expensive choice. While this means spending a considerable amount of time and money, it may be your best option in qualifying for a mortgage. Banks often want to unload fixer-uppers too, so that also will work in your favor. Do not take out a mortgage loan for more than you can comfortably afford to pay back. Sometimes lenders offer borrowers a lot more money than they need, and it can be quite tempting since it would help you purchase a bigger house. Decline their offer because it will lead you into a debt pit you may have much trouble getting out of. Make sure you pay down any debts and avoid new ones while in the process of getting approved for a mortgage loan. Before a lender approves you for a mortgage, they evaluate your debt-to-income ratio. If your debt ratio is too high, the lender can offer you a lower mortgage or deny you a loan. Shop around for the best mortgage terms. Lenders individually set term limits on their loans. By shopping around, you can get a lower interest rate or lower down payment requirements. When shopping around, don't forget about mortgage brokers who have the ability to work with multiple lenders to find you the best rate. Be wary of mortgage lenders who promise you the moon. Most lenders work on commission, so it goes without saying that there are dishonest lenders who will promise anything to get a commission. Remember that you can back out of loan application at any time if you do not feel comfortable. Before applying for a home mortgage, get your debts in order. Consolidate small debts with high interest rates and put a solid effort into paying them off. Do not take on new debt while you are preparing to apply for a home mortgage. The cleaner your debt record when you apply for a home mortgage, the better your chances of getting approval for a good loan at a good rate. Save enough money to make a down payment. Lenders may accept as little as 3.5% down, but try to make a larger down payment. If you put down 20% of your total mortgage, you may not have to pay private mortgage insurance and your payments will be lower. You will also need cash to pay closing costs, application fees, and other expenses. Understand the difference between a mortgage broker and a mortgage lender. There is an important distinction that you need to be aware of so you can make the best choice for your situation. A mortgage broker is a middleman who helps you shop for loans from several different lenders. A mortgage lender is the direct source for a loan. Do not let a single mortgage denial keep you from searching for a mortgage. Each lender has different guidelines, so you may be able to qualify with a different lender. Keep shopping around until you have exhausted all of your possibilities. Perhaps it will take a co-signer to help secure that loan for you. Pay more towards the principal every month that you can. This will help you pay down your loan more quickly. If you pay just $100 extra, you can shave 10 years off your mortgage term. If you have filed for bankruptcy, you may have to wait 2 or 3 years before you qualify for a mortgage loan. However, you may end up paying higher interest rates. The best way to save money when buying a home after a bankruptcy is to have a large down payment. If you are thinking about changing jobs, try to wait until after your loan approval process is over. This is because the underwriter will have to go through the employment verification process all over again. They will also require you to submit paycheck information, which means that you would have to put the loan off until after you are paid a few times. Keep your credit score in good shape by always paying your bills on time. Avoid negative reporting on your score by staying current on all your obligations, even your utility bills. You can build a good credit rating by using cards and paying them off every month. If you already know your credit is poor, try to save a substantial down payment in advance of applying. Some aspiring homeowners can get a mortgage with a down payment that's only 3, 4, or 5%. But if you want solid chances of approval, then you need to come up with 20% of the home's value. Take your time with this process, and hopefully some of these tips can turn your mortgage journey into a positive outcome.